Let's talk about Polestar. What's up investors and welcome back to another video. It's been a long time since I made a GGPI Polestar video, but things are finally beginning to happen and there is lots of good news this week that I will be looking at in today's video. Of course, with the stock market crashing, I will talk about the positives and the negatives regarding this stock, and I will look at the potential risks too. If you like the content and you see value in this type of video that looks at both positives and negatives, then help me grow this channel by smashing the like button and dropping a comment. I'm aiming for 300 likes and comments on this video. Let's make that happen. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. I want to point out that I'm not a financial advisor and this is not financial advice. Now let's get into it. If you're new to this stock, GGPI Gores Guggenheim went public with its IPO in March 2021. The firm is backed by the serial entrepreneur, billionaire Alec Gores and the Guggenheim Investment Group, who have a long history and track record of successfully investing in and operating businesses. Polestar is a global pure-play, premium electric vehicle company based in Sweden with a mission to produce progressive electric performance cars designed and engineered without compromise. They say they are a design-focused electric performance car brand harnessing refined performance and cutting-edge technology. Polestar, which is backed by the Volvo Car Group and Geely Automotive, also counts Hollywood actors Leonardo DiCaprio and Oscar Isaac amongst its investors. The company is determined to improve the society we live in by accelerating the change to fully electric, climate-neutral, and they are trying to achieve a net zero greenhouse gas emissions while leading the development of new technologies. Looking at the most recent investors presentation, the company was originally founded in 1996 as a racing company and developed a partnership with Volvo before being acquired by the Volvo Group in 2015. They announced their Polestar 1 in 2017 and the Polestar 2 in 2019. In 2019, they also opened their Polestar production facility and by 2020 were making their first sales. Polestar is operating in select countries across Europe, North America and Asia, but are planning major expansion over the next 2 years, further increasing their reach across Europe, Asia and the Middle East. Now I just want to take a look at this before getting into the most recent developments for Polestar. But as a reminder that unlike most EV companies, Polestar are already producing and delivering a large quantity of vehicles. When we look at EV companies in general, their delivery figures are extremely low, with the exception of Tesla, who are miles ahead of everybody else. But last year, Polestar delivered 29,000 units and had been planning to deliver a further 65,000 units for 2022. Now there has been an update to this, which I will look at in just a moment, but if you compare this, for example, with Lucid Motors, who delivered a total of 360 vehicles in the first quarter of this year, we can see the scale that Polestar have already achieved in a short time. Now this is not me taking a swipe at Lucid. Some of the most talked about EV stocks on the market are yet to even begin sales and deliveries. But the fact remains that at the moment EV stocks have nosedived. Lucid Motors is down over 70% from its high just 6 months ago. Rivian has crashed over 80%, and even the mighty Tesla has dropped almost 50% from its 52-week high, which means that once again Elon Musk is not the richest man in the world. So this market drop has provided some opportunities in the EV sector. But looking again here, we can see that the future predicted sales for Polestar over the next 18 months are dependent on two main models, the Polestar 2 and then the not yet released Polestar 3. But then just yesterday, Polestar 3 was officially confirmed for October 2022 debut. The official announcement is hidden in a press release summarizing sales and financial results for the first 4 months of the year, which I will look at in a moment, as well as the all-important SEC filings regarding the upcoming merger date, so stick around for that. The company believes that it has the potential to grow significantly with the launch of Polestar 3, as the SUV market is one of the highest growth and margin segments in the automotive industry today. Polestar 3 will be manufactured in the US and China and will stand out amongst other SUV offerings and boost the strong growth trajectory to take us into the next phase, and that is according to CEO Thomas Ingelath. But on Thursday, Polestar reported a strong start to 2022 with record sales, continued growth and market expansion. Guys, if you've watched this far into the video, thank you so much for watching, I really appreciate it. If you have not already done so, then help me hit my targets by liking this video and commenting below. I would love to hear your thoughts on what you expect from Polestar over the next 5 years, but also give me your thoughts on the current stock market crash and how long you think that this market crash will last. So Polestar recorded sales for the first 4 months of 2022, as well as excellent global order intake fueled by continued expansion into new and existing markets. In the first 4 months of the year, vehicle sales more than doubled to approximately 13,600, and the company's order take more than trebled to nearly 23,000 compared to the same period in 2021. Now let's remember that they delivered a total of 29,000 vehicles in 2021. So to now have orders for over 23,000 within just 4 months is a massive increase. And that would be perfectly in line with the company's previous plan to deliver 65,000 units in 2022. But Polestar's management are being extremely prudent and realistic with their projections, which is something that a lot of EV companies are not doing. In light of lockdowns around the world, management have reduced their 2022 forecast from 65,000 down to 50,000 vehicles. Now for me, this is a huge plus. Management are not trying to pump the stock. They're actually being very cautious with their low projections, and I feel that these projections are something that the company can easily achieve. This is a global company after all. Polestar increased its global presence to 23 markets, up from 19 at the end of 2021, putting the company on track to meet its target of 30 markets in aggregate by the end of 2023. New markets in the Middle East and Europe will be joined by Spain and Portugal, and plans are underway to begin operations in Israel and Italy later in 2022. But let's not forget the deal, as it says here, 65,000 vehicles with Hertz over the next 5 years. That one deal alone averages 13,000 vehicles per year. So make no mistake about it, when it comes to pure play EV companies, Polestar are miles ahead of at least 90% of their competition. But in terms of valuation, when we look at the market capitalization of this company compared with its rivals, how does it really match up? And is Polestar undervalued in today's EV market? So let's remember that when this merger was originally agreed upon, EV stocks were still flying high on massive valuations. So it's possible that given the current market conditions, Polestar, GGPI, could actually be overvalued. And let me explain this. The merger values Polestar at $20 billion, while the share price is at $10 per share. And this is still very low compared to its rival companies, who even after the drop in value are still trading multiple times higher. For example, Lucid has now dropped to $29 billion, while Rivian has dropped to a valuation of $25 billion. But as I said already, these companies are not yet producing significant numbers, while Polestar is still miles ahead. And when it comes to profitability, Polestar is still years ahead of the competition, with profitability expected within the next 4 years. But this does not come without risks. The market crash of 2022 has seen major players like Tesla drop about $500 billion in value, and we also see legacy automotive manufacturers such as Ford dropping to only $50 billion, meaning that they have a PE ratio of about 4, which is not far above Polestar's projections either. So for this merger to be completed in the current market conditions could be very risky. But at the moment, while the stock is still a SPAC, the downside is fully protected. Remember that these special purpose acquisition stocks are bound to rules, generally meaning that the stock floor is $10. Now, considering that the stock has fluctuated fairly regularly in this channel between the $10 stock floor and $12, there is a risk of only about 1.28%, while a possible gain of about 21% could easily happen. Usually with these types of mergers, the stock price will go up in the weeks and especially the days before the merger is completed, and this could easily happen again here. Even for the short-term investors who are not looking at this for the long-term hold and just looking for short-term gains, this is one of the best downside protected stocks on the market. Now everything could change after the merger is completed, of course, but for now, $10 is this stock's floor. So the merger date is very important. And GGPI Polestar have repeatedly said that their expectation is to complete this merger during the first half of 2022. And over the past several months, they have filed several Form F4 amendments, and the latest of these was filed just yesterday. And in this, they have once again reiterated their expectation to close in the first half of the year. But if we look a little bit closer at the details, we can see that these amendments are becoming far more frequent, which I'm going to see as a good sign that they are getting very close to having this accepted by the SEC. Either way, this must be concluded within the next 5 weeks, as the deadline, which was previously May 27th, has been pushed out to the 24th of June. So this merger is nearing its completion, for sure. Before I give you my conclusion on this stock, I would greatly appreciate if you could smash the like button and hit the subscribe button if you're new to the channel. Amazingly, 79% of my viewers are still unsubscribed. That means that 79% of my viewers more than likely missed out on the likes of Redbox, which I covered recently at $3, just before it ran to over $10 in less than 48 hours. And Redbox stock has just had another fantastic week, gaining over 100% in the past 5 days. So don't miss out. It doesn't cost anything to subscribe to the channel. For my conclusion, Polestar is currently one of the lowest risk EV stocks on the entire market. There is potential here for quick profits leading up to the merger date, when there will be a lot of interest in this stock. Whether the stock is undervalued or overvalued at the current price for the long-term projections is dependent right now on the market conditions, but it is not overvalued when compared to its rivals. Of course, this is my opinion, and remember that I am not a financial advisor and this is not financial advice. If you enjoyed this video, like and subscribe, follow me on Twitter, and I'll catch you in the next update.